Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, Julie shares her winding path from studying biomedical ethics at Cornell to getting her MBA at Columbia, to joining McKinsey as a health specialist, to her stint in investment banking at Lazard as an associate. Listen to hear about her triumphs and struggles as she navigated a move to London to join the venture arm of a large biopharma company, to her move back to the States 5 years later, all while starting a family. Enjoy. Julie, thanks so much for joining the Wall Street Oasis podcast.
My pleasure.
So
I'm glad you put this together.
It'd be awesome if you could just give the listeners a short summary of your bio.
Sure. I consider myself a healthcare expert, business person primarily, but with a long interest in healthcare since before college. Also known as not a doctor, but like to play one on TV and at home. I had always had an interest in business and medicine, and started at Cornell with a major in biomedical ethics, then went on to work for companies that combined the two, went to business school at Columbia, and then worked for McKinsey as a consultant, really specializing in healthcare. They had a specialist track, and I was very fortunate to work with a partner who had a lot of work in the healthcare space, particularly with pharmaceutical companies. He left McKinsey to go to Lazard and start a healthcare practice or build upon a very nascent one. So I went to work with him. That was a great move for a variety of reasons. And I think not everybody suits the sort of investment banking culture or the consulting culture, but for me, it was a very good move. And for him as well, he's now co-chairman of Lazard, and remains a very good friend to me and the family. Left there, was very fortunate that they had started a venture group at Lazard. So I spent a year kind of dipping my toe in the water because I'd always had an itch for doing something in biotech and startups. And then left there to run a .com for a year in London, out of SoftBank Incubator, and then left there missing healthcare. And so I went to the Wellcome Trust and helped them organize and invest in healthcare in a more systematic way. The Wellcome Trust is a very active investor, 26 billion pounds under management at the time that I was there. And I spent 10 years building up a healthcare investment practice for them, doing direct investments into startup companies and investing in funds as well.
Very cool.
So,
and you were there for a while. You had a long run there in London.
Yes, 10 years. And then came back to the US and worked at two healthcare information startups where I was a co-founder and really had a blast. So now I'm on my third more entrepreneurial venture, and I'm happy to talk about that.
Awesome. Let's go all the way back before we get there, all the way to undergrad. And so you said you were always interested in healthcare, but was consulting ever on the horizon? Did you ever think, oh, McKinsey, this is incredible if I could get there? Or was it something more that you just kind of happened upon after graduation?
That was more after graduation and after a series of consulting experiences, one right out of college with the Wilkerson Group. The Wilkerson Group was a small consulting firm. They called themselves the McKinsey of healthcare.
Okay.
And at the time, I grew up in a family where my mother was in education, had been a teacher and administrator, and my father was more entrepreneurial in the insurance sector. And we didn't really rub elbows with people who worked at places like McKinsey. So I didn't know anything about that end of the business world. I didn't have friends or family who had MBAs, so most of them were more from doctors and lawyers sectors, and had more professional track careers.
So your first few years out of school, like you're majoring in biomedical ethics. What's your first few roles out of school, or did you go straight to the MBA pretty fast?
Well, so I was able to get a job over the summer with a company that specialized in an aspect of healthcare. They were based out of New Haven
Mhm.
and formed based on research that was done at Yale on how to reimburse for healthcare. And that company was very small, niche player
Mhm.
that did coding for healthcare procedures. And so they published these books, which we still rely on very heavily.
Yeah.
So I was getting to know how healthcare works and in terms of mechanics, and went from there to um, the Wilkerson Group right out of college.
Mhm.
And that was sort of as I described it, they coined it the McKinsey of healthcare.
And
Learned a little bit
was
about
there a,
business.
was there a mentor that was like, you should definitely go get an MBA?
No, in fact, there was quite the opposite. So John
Mhm.
Wilkerson, who ran the Wilkerson Group and happened to also be a Cornellian, was very much a mentor to me and encouraged me to do some work while I was working there for the company at a corporate level, helping with PR. Um, because while we served clients, um, primarily pharmaceutical, biotech, and medical device companies in terms of strategy and market research, um, which could get very technical, we, as a firm, needed to elevate our reputation. And so I periodically would be assigned to do research that would get published either in the news or maybe in a publication. We did collaborative publications with banks and accounting firms that like to do overviews of the biotech sector, for example. And I did a report for the Wall Street Journal, which was sort of the anatomy of a hospital bill. And 20 years later, they did the same article with the same research, and it still looks insane. But that was really the experience base. So it was a little bit broader than just serving clients. I was, very much in love with healthcare. But wanted to get an MBA because I felt that I needed more credibility in the business world. So I went to Columbia and continued to work for the Wilkerson Group on a part time basis because they were in Manhattan, which was really partly what drove my decision to go to Columbia.
Mhm.
Then while I was there, just kind of got through and
Were you
spent some
partly
time.
financing your MBA with the Wilkerson with it as well?
Yeah, I was trying. Yeah, it was a combination of
Expensive.
loans and and jobs,
Yeah.
piecing it all together. And in fact, I had explored the executive MBA option,
Mhm.
which was a popular thing at NYU, and Columbia offered one as well. But it was really popular for the banks, which had lots of money to pay for people to get an MBA. But this was a relatively small consulting firm at the time. They eventually were sold to IBM, but that firm wasn't in a position to pay for me to get an MBA. And in fact, the executive MBA program was double the price for really no reason other than the
Right.
luxury of being able to take night classes, which didn't really appeal anyway. So
Mhm.
they were very flexible. I got to sort of keep keep a hand in what was happening in industry
Mhm.
and make some money. And when I left, went to work for the biotech division of Johnson and Johnson as an intern, first for a summer, and then kind of extended that into a job, and ultimately, um, after that, got a job at a startup biotech company, which was what I really
And
thought I
this
wanted to
is right
do.
out of Columbia. This is your MBA.
Yeah, yeah. So this is a fun, story for those who are exploring. I
Yeah.
had an excellent professor. Um, Professor Lowe at Columbia,
Mhm.
who taught strategy. And I spoke to him. You can just picture this, right? We're in a sort of library ish setting with big leather chairs at the business school. And I said, I'm not really sure I should go to this biotech startup. I mean, they have some venture money. There are only three people working there and some R&D based in Israel. Um, I could go work for Johnson and Johnson, continue this role that I had as an intern, and start on a management training path. What do you think? And his advice was, well, what's the worst thing that happens if you take the risk of your job? You could be back here talking to me about the next thing, but at least you would have tried. And so he really encouraged me to go for that, which I did 6 or 8 months later, out of desperation because the person I worked for was really challenging.
Hmm.
I decided that maybe I could do something else, and I responded to an ad in the Wall Street Journal for a job for a healthcare specialist at McKinsey.
Interesting.
And
So you found the ad through the Wall Street Journal.
yes,
That's awesome. And so you responded to an ad there, and tell me what that process was like. Where so first off, that it sounds like it was a startup with three people. You just don't never know what you're going to get. It could be a dream job and skyrocketed career and everything, or it can be a nightmare where you don't know what the person is really like once you start working with them. And so yeah, we've all had those.
yeah,
So
exactly.
you end up applying to this healthcare specialist. What is this role, and how did they sell it to you, and what was the interview process like to get into McKinsey?
Well, it turned out that there was just a really good fit between what I had done, primarily at the Wilkerson Group, and
Mhm.
after that, there was very little in between other than business school, um, and and what they wanted. They were looking for someone in the specialist role in that track that they have at McKinsey, which I'm sure has changed quite a bit since then. They have specialists in different industries who provide guidance to teams that are serving clients. They
Mhm.
have to remain somewhat neutral, but they also have to have mastery over the subject matter, the sort of industry dynamics, and they kind of act like a tutor because McKinsey's philosophy was to hire people with what they called raw smarts. And sometimes those people were rocket scientists, literally, and sometimes physicians, but sometimes they were just very bright, motivated Harvard MBAs who knew absolutely nothing about the client that they were going to serve. So you'd provide primers, and I worked with a small team, including a specialized librarian and a researcher in Switzerland, and we would put together educational materials
Mhm.
both for a specific client or situation and for the firm in general. And we would run twice a year. We would run international training sessions for people who like doing healthcare care or had a lot of healthcare clients.
So these types of
Um,
roles, specialist roles within the large consulting companies, are they typically, is there one for like how many, is there a lot of these roles, or are they very kind of, is there only like a handful of these people
it's
who are,
more like a handful,
yeah,
but they can
20 of
have
them
some
across the whole firm or
infrastructure.
something like that, or 30?
Yeah,
Yeah. Okay.
I couldn't put a number on it, but it's probably 20 to 30. It just depends on the industry too. But um, people have taken on, I think, as the world has become more complex, people have specialized more because you need a certain amount of at least language to go into a client. And they don't want to waste their time teaching you about their industry,
Right.
so or their situation, and could extend from an R&D strategy to a Salesforce strategy. So you could really be all over the map,
Yeah.
even just within healthcare. And I was only in the pharma biotech and medical device sector as opposed to payer provider, which had a different team and a different specialist. I have to
Super
say,
complex. Yeah.
it was a fantastic experience, despite the fact that when I arrived there, I discovered that the specialist track was also called the mommy track. And there was
Oh,
some,
really? Okay.
yes, there was some sort of status issue there. But
You
there
weren't
were a lot
you
of
weren't a strategy consultant. You were just a specialist that would come in, and it wasn't considered like you're not client facing,
right, exactly.
support role.
Um, yeah.
Yeah.
So there was that issue. But because of the fact that a lot of people had transitioned into a specialist role for lifestyle reasons, there were a lot of people who were highly respected in a client facing role who had then shifted into a support role or a specialist role. And some of them maintained client facing experience at times.
Mhm.
I said that I wanted more client facing experience, so I got a little bit
Mhm.
along the way. But I benefited from the rigor of how things are done there, and made some amazing connections, which I still benefit from today. So the two startups that I worked at most recently, or when I returned from London, one of them was run by the head of the healthcare practice at McKinsey when I was there.
Mhm.
His name is Norman Selby.
Mhm.
And just a couple of years ago, he's spun out a company from Sloan Kettering and called and asked me to help him with the strategy and business planning and the pitch for that company to raise money.
Hmm.
And that was a very hip fundraising for
Hmm.
Page AI, which is in the AI space
Yep.
in computational pathology. So I'm still friendly with Norman, and he obviously had maintained some respect for me along the way, even though I was a specialist. So at the end of the day, it worked out just fine. But I think it's always challenging to manage, your own ego in these situations. I don't, it's very competitive and very lockstep to get a job at McKinsey as a consultant straight from business school.
Hmm.
Um, at the time, they recruited from a fairly narrow subset of schools
Yep.
and kinds of individuals. So I probably would never have been considered in that track. Um, and this was an amazing experience and way in. And I really did have a very deep understanding of how to do research um, and what the dynamics were in the pharmaceutical and biotech industry in particular that that I was able to share and leverage.
That's great.
So it worked out.
So your transition then 3 years later after joining McKinsey to Lazard, this was mostly because your direct boss went and was starting a practice there
Well,
for.
he wasn't my boss in the sense that he was just one of many consultants who had a lot of engagements in the industry. So he
Hmm.
was, at a senior level and able to specialize and have relationships in industry, which he wanted to leverage. And at that time, I think he was trying to progress his career and debated, what the right move was, and found that there was a place for him to build something. He has a very entrepreneurial bent. He'd worked starting up some biotech enterprises before and has an engineering background. And I think it was just a great move for him personally. And I liked the idea of doing something else a little bit challenging. I was looking for something that I wasn't looking for the lifetime career as a specialist at McKinsey.
Hmm.
That was the beginning. So for me, this was a chance to learn much more about other aspects of the industry, which are really fundamental to their growth. I mean, you can't finance a company, you can't grow without finance.
So
So
you're
this was
coming
sort of the other
into
side.
you're coming into Lazard. Tell me your role. What was expected of you making that transition from McKinsey to Lazard, and what was your role in that group? Were you doing investment banking? Were you doing research support, client support? I'd love to hear what you did there.
Well, because I had an MBA from Columbia, I was treated like any other associate.
Got
So I
it.
was brought in um, as an associate and did training. Their program was not as formal as it might be at a Goldman Sachs. Um, because it's a relatively small bank, and
Mhm.
so I learned from people around me. I did some training. I took, the required
Was it
regulatory
was it really tough? Coming from
classes.
no finance background. I mean, you had your finance MBA, but it's very different, right?
Right.
From the real world, right?
It's completely different.
Yeah.
But I learned a lot along the way, and I think there's it's like any other profession. There's a language that you have to learn, and once you get that, if you have the right encouragement, it's not that hard.
What about the lifestyle change? Because healthcare specialist, you said, was considered a more relaxed, and then going not just from a consulting to banking, but a a supposedly better lifestyle section of consulting,
Right.
the grueling hours of investment banking, especially in an associate level where you don't have the technical background. You're trying to manage analysts. You're trying to manage up to your VPs and MDs. I mean, I can't even imagine that culture shock,
Right.
or that just rigor that you had to go through. Can you tell me about that transition and how you even survived as long as you did?
Yeah, you know what? I think I always liked working hard.
Hmm.
Maybe one of the things that made my experience at McKinsey a positive one was that I really didn't mind working till all hours and being highly responsive to people.
You didn't treat
I
the
was
specialist job as if some sort of you really put in long hours anyway, so it wasn't as dramatic a transition to Lazard.
right. Well, I think that's correct. And also, my peer group was more the consultants. So my friends at McKinsey were people who were on the consulting track, traveling a lot, had a really intensive lifestyle, and I wanted to sort of meet them where they were.
Mm.
And so I would respond at any time of day, and I
Yeah.
kind of enjoyed doing that. I also spent a lot of time and energy. I always loved the information technology space, and it was at a time, just to crack you up, when they were adopting Lotus Notes. Okay,
The
so
90s.
the yeah,
Yeah.
and so one of the things that I sort of took upon myself was to become more sophisticated about how we accessed and deployed information, given the technology backbone we had at McKinsey, and it was really very, it was very evolved because it was McKinsey and that was just how they operated. They're
Mhm.
very well organized in terms of collecting and disseminating information across an international enterprise. So I kind of got spoiled and had a really high standard then for how to do that. And there aren't a lot of companies out there that do that as well as they did.
Mhm.
Now it's a lot easier because of technology, but that was kind of, they always had that vision in mind, which I thought was really cool.
That's
So
awesome.
at Lazard, they had plenty of infrastructure too. It was a little
It's
bit,
smaller. Yeah.
yeah,
Yeah.
and it wasn't as relevant in terms of work style, lifestyle. You know, we were a small team. There was just a handful of us. We worked very closely together. I did work from the sort of analyst level all the way up. It was kind of me and Steve at the very beginning, and so we would just work till all hours when we needed to. And
Did you have an
um,
analyst under you right away, or were you
no,
forced to do all the modeling and
no,
everything
I did a
yourself?
lot myself, and then I worked with analysts who were much better at the
Mhm.
technical analysis piece, or had done it a lot, and learned from them because I needed to be able to check work.
Yep.
Um, and Yeah, I was able to rely on them, but I did have to do quite a bit myself.
Yeah.
Um, and not all of it came naturally to me. I got to tell you that was challenging.
Yeah, no, for me as well. When I started, I came from a liberal arts background and had no
Uh-huh.
finance, no accounting, anything. So it was 6 months of pain for me when I started.
Yeah.
So in terms of the transition, so Lazard, it sounds like you had a few great years. You had some great um, deals that you worked with on the healthcare space. You had some transactions that you got under your belt. Sounds like.
Yeah.
Is that and then
Yeah.
so what prompted in '99 the move out to London? The welcome.
Um, let's see. Well, I'd had this sort of itch to do something more startup like, and I had just gotten married, and so I'd spent a few months or just under a year working with the venture group that had gotten started at Lazard. So I'd kind of asked Steve, "Do you mind if I go do this for a little bit and try it out?" And he, at that time, the group had evolved quite a lot, um, and so I tried that. It was really interesting. It was the dot-com boom moment,
Yeah.
and um, I learned from a very experienced partner. Um, and then got married right around that time and moved to London because we had an opportunity to do that. My husband, had an opportunity to go to London with his firm, and it
What
sounded
was
like
what was he
a
doing
great thing to do.
back then?
So he was at Goldman, actually, in
Okay.
real estate. So we both sort of came up from a specialized kind of passion in a particular field. We
Yeah.
were, neither one of us was, banker all the way kind of a person,
Yeah.
I think. Um, and so he had always liked traveling. I love to travel. And we said, this sounds like a great opportunity. Let's go do this now. It's a
Mhm.
great way to start a marriage. No family, mucking around.
Yeah.
Um,
You're truly alone.
right.
Yeah.
We traveled all over. I talked to some friends who had been doing a lot of web design in New York from one of the firms that I had met during the course of my work at Lazard in their venture group, which was not healthcare focused at all.
Mhm.
Um, and so I got introduced to some people in London, and ultimately to SoftBank's incubator. So they were starting up an incubator to roll out dot coms that had been successful in the US that they wanted to roll out in Europe.
Mhm.
And they had this sort of cookie cutter approach, which made no sense in some industries and a lot of sense in others. And I was recruited to run law.com, which was Wasserstein Perella's AmericanLawyerMedia.com version.
Okay.
And it was a wild ride. That model was based on content that was coming from American Lawyer Media, so the investor slash owner
Mm-hmm.
owned all that content. It
Mm-hmm.
was produced and published in journals, in the New York Law Journal and the law
Yep.
journals for 38 states or something, and siphoned into a website. So they wanted me to recreate that, but we had no content.
Mm.
So we built a news team and hired legal news reporters, built a strategy around it, tried to syndicate it, and built up relationships with some other content players in Europe,
And so
like Wolters
this
Kluwer.
is like early 2000 when you were doing all this?
Yeah,
So
yeah.
then, I mean, when did, I'm trying to remember back, was it like '01 when everything started falling apart? And tell me how it sounds like you were pretty heavily involved, even though this was at the head of healthcare investments, or this was now a different thing before you were in
So this was
London.
before them. It was just 1 year, and
Yeah.
it was a crazy, incredible experience. I kind
Yeah.
of just showed up, drew out a strategy, had a plan for
Hmm.
$250,000 a quarter we were going to spend, and it was probably pounds. And I worked with the head of the enterprise for the U.S. Um, and we tried to build something where there was nothing before.
Hmm.
And ultimately, I kind of went back to the CEO and said, "This isn't going to work. The model doesn't work. You can't make enough money to keep it afloat.
Right. Like
Advertising isn't
to
going to
pay for,
work."
yeah, to pay for all the reporters and everything and the
Right.
production. Yeah.
Yeah. And he said, "Great. I think I agree with you. And we've been exploring in the US providing legal software online on an ASP based platform." And I said, "Great." And he said, "I think we'll acquire a business in that area and morph the UK enterprise to be that kind of a business as well." And so I wrote to the head of the Ministry of Science and Health in the UK and said, "I'd like to work for an organization like the Wellcome Trust." He was Lord Sainsbury, and he was a Columbia Business School grad.
Hmm.
And out of I don't know where I got the idea, but the UK is a lot smaller than the US. I wrote him this letter, and I got a call and an invitation to meet with the head of investments at the Wellcome Trust.
Mm.
And it was a really interesting, I thought it was a pretty interesting path. But what happened was the last work I had done at Lazard happened to be on the merger of Glaxo, Wellcome, and SmithKline. When the companies merged, so I really knew those portfolios back and forward.
Hmm.
So I understood every drug in development, what the cost structure looked like, how they were going to keep their EPS up. I had enough fluency in that particular
Yep.
organization to really speak about it. And the head of investments at Wellcome was dealing with the trustees trying to decide how to reallocate their portfolio. And they were thinking about how they were somewhat overweight in terms of Wellcome stock because it was part of the name. So they never wanted to sell Wellcome. It might signal something that they didn't want to signal. But when the merger was announced, the name Wellcome was dropped from the company. It became GlaxoSmithKline.
So fun. Yep.
Yeah. So I mean, it's funny how these things get going. But we started with a conversation. He asked me if I could help him evaluate the prospects for the stock over the next couple of years. They're very long term focused, and they didn't want to do anything dramatic, and
Hmm.
they didn't want to hurt the share price of the company. Um, but they wanted to do the right thing for the Wellcome Trust, for the endowment.
Yep.
So I did essentially a buy side assignment, and I worked very closely with this gentleman, Gary Steinberg, who was absolutely lovely, and he and I presented to the trustees of the Wellcome Trust a recommendation to sell down the shares, and it was a right move. I looked like a genius. The stock price was never as high as it was at the time that I made that call, so it just it just happened to go in the right direction for them. And um, I also got a sort of a window into what they were doing in terms of investment strategy,
So
and I
you
found
were
that they were
brought
doing a
in.
lot.
So yeah, you were brought in almost like like you said, a buy side engagement where you were responsible of. So the merger had already happened with Glass.
Yeah.
and so Welcome was brought into that fold, but the name was dropped. So now there was almost like an ability to go sell some of those assets without it hurting the overall entity. Was that the,
Exactly. So
okay.
the Wellcome Trust's base endowment was formed out of Wellcome PLC when
Mm.
it was a company taken public. So when they it was the Wellcome Trust actually that sold those shares into the public domain to create the public company,
Yeah.
Wellcome PLC. That company became Glaxo Wellcome and then GlaxoSmithKline.
Oh my
And
gosh.
it
Wow.
had just been, a couple of,
And it was more, was
24
it more
months
earlier,
before.
was it focused more earlier stage life science type investments, or what
It
was
was a
it?
combination. They had a pipeline of drugs in development, not preclinical really, mostly
Okay.
clinical stage
Yep.
assets and, different therapeutic areas. And there was, I think it was pretty transparent to me and I think, to many analysts that they were going to be in a mode where there wasn't a lot of opportunity for growth in the existing portfolio, and that in order to maintain their EPS growth, they would have to reorganize. They might be selling down some of their manufacturing plants and things like that, and a lot of which happened.
Yep.
Um,
So
and
I'm
so
reading here on your LinkedIn that you built a portfolio of 250 million in healthcare direct investments. So when was that? So you came in, you helped kind of sell off some of the assets, and then
it
you
was
just,
basically a year of,
yeah.
what's this stock worth? How should we manage it? We spoke to investment bankers about what a sell down process might look like. They approached GlaxoSmithKline to talk about a share buyback program or, uh, a, a drip related
Mm,
transaction where we might structure a way to sell back the shares to them so so that it wouldn't have a dramatic effect on the share price.
mhm,
And while I was there, and I was really just doing that as a consulting engagement,
mhm,
um, got to know the investment team. There were only about a dozen people there. They were all generalists, and yet they had significant stakes in a number of venture funds that were healthcare focused.
mhm,
And they had a portfolio of maybe 10 or so companies that they'd been asked to invest in as a venture investor. But they didn't really do any diligence. They just relied on their relationships with those investors. Um, and a lot of really high profile healthcare investors, so groups like Healthcare Ventures and Benrock and um, Benchmark and Sequoia, who do some healthcare, really prominent groups that knew a lot and had been pretty successful, but um, they weren't really in the business of um, making our portfolio look better. And on occasion, and I think every venture investor will attest to this, you just need to get some more capital around the table when you have to do a refinancing or um, a down round. You
mhm.
might call upon the people who are your LPs and have some extra capital to help keep those programs going. If you think that if you don't want to kill them,
Yeah.
so that was where we were contributing a little bit of capital. It wasn't moving the needle one way or the other, but um, I had suggested maybe we try to systematize that just because the Wellcome Trust is a medical research foundation. So while we were only a dozen people, there were 600 people doing um, making decisions about medical research grants that were really profound and had an impact on basic science research in medicine.
Mm,
So they had experts all over the world in every subject area. And so I thought maybe we could tap into that. So
yeah.
I used that as a way to kind of field new ideas, um, diligence opportunities that were coming to us,
Mm.
and just to systematize what we had. And with that, of course, came across a lot more opportunities for us to invest. One of which was founding a company straight out of Johns Hopkins, which was really successful and a lot of fun.
That's awesome. Sounds like a wild ride. So you were in London this entire time, so almost 10 years.
I was in London for 5 and then back in New York for the other 5, but
Okay.
working just for them.
Just for them. Very cool. And so when you came back to New York, was there a reason you wanted to get back? I mean, I think being in London, you're originally from the US, right? So maybe you just want to get
Yep.
back home, closer to family. You had enough time alone with your husband where it was like, okay, now we got to get close
Yeah.
to family.
Been there, done that. Yeah. No, we had 2 kids while we were there,
Yeah.
and we traveled all over, some with them, some before.
Hmm.
And my father, unfortunately, was really sick. He had lung cancer,
Oh,
and
I'm sorry.
it was a good time to be back for my husband professionally, because I think at some point you need to make a decision in your career about the relationships that you're building and whether you want to build those relationships long term in Europe or the US. And I think he felt that it was time for him, and it was also for me personally, um, it was a good time. Most of our investments at the Wellcome Trust and most of the funds that we were LPs in were based in the U.S. anyway,
Hmm.
so it didn't really disrupt my work. Although I think one of the things you wanted to focus on is transitions. It was a lot harder, and I appreciate this now, to kind of stay in the flow when you're not part of an office or an entity.
Hmm.
Um, so that was a bit challenging.
What do you mean by that specifically? So like when you're not
Um,
when you're meaning when you're over here in New York and more people are there, it's hard to stay up to date, or
yeah, even though the people that I worked with, I had two analysts working with me at the
Mhm.
Wellcome Trust. So I sort of had to coordinate with them. They were staying in the UK. Um, but I wasn't as much part of the flow of information. Certainly locally, I didn't have as much face time. And I think professionally, if I had wanted to um, maintain or really make the most out of it, I would have needed to be in London maybe a week a month.
Yeah,
But I
a
had
lot.
two little kids
Yeah.
and was about to have a third, and so it was not going to work for me in that regard. I have to say, you know, I chuckle at the idea. Was kicking around an idea with a friend of mine
Hmm.
who's the chief medical officer for Cura Oncology, a very successful young biotech company.
Hmm.
And she's been a friend of mine since college. She's navigated medicine. She has an MD, and she has navigated a beautiful career for herself. And yet, her the thorn in her side is that she's viewed as technical, and she wishes that she could be viewed more as an executive.
Mm.
And I said, well, it's challenging to do everything, right? I was very fortunate that I was able to work um, very much independently, and I had an office, but I had a ton of autonomy. I was basically my own boss. So I was able to raise kids and be there for them and very involved. My husband's job involved some travel and a lot of time demands. So one of us was going to be,
Be home.
uh, on.
Did you
And
have any help with nannies at all, or I
I
assume with three?
I
Like,
did. Yes, I had 10 years with the best nanny on the face of the earth, who remains like family.
mhm,
We always joke that she's the family we never had, but she really is family. And now my oldest son babysits for her baby.
that's awesome.
So yeah, but she was everything, and really made things happen, and it was very fluid because of her.
Mhm.
Uh, but I think I ultimately, you know, I think you make a trade-off whether it's conscious or not. There are a lot of demands on your time. I probably would have benefited from doing more networking, um, and perhaps being more aggressive about transitioning either from the Wellcome Trust to an established venture fund,
Mhm.
or corporate VC, or something like that in terms of career path. But I was very interested in taking on an operating role. And I also really liked the
You were
healthcare
also though, I
technology
mean, you had
space.
just come back, you were back for 5 years, but you had come back,
Right.
you had a good like you said, the autonomy is a big deal when you have young kids. It's a
It's a great
it's
gig.
a really big deal, like, I know, because if I didn't have this
You're right
autonomy,
there.
we'd be in deep trouble. Like, my wife has to
Right.
go in, and she's a doctor, and so she's going in all the time. Not now, but she was, and that
Right.
flexibility of me being at home is just huge.
Yeah.
So yeah, I can imagine.
So, speaking of physicians, I think it's a really good comparison. When you're a physician or you have a profession that you're able to provide a service with,
Mhm.
your value is pretty constant.
Yeah.
As long as you maintain your credentials.
Mhm.
But for me, I felt at the time I'd really nailed it. I was able to manage a career and a family, and it's sort of like nailed it. But now what?
Mhm.
Because um, coming out of that, I phased out after 5 years in the US because there was somebody in London who had a lot of, he was primarily responsible for the venture capital relationships.
Mhm.
And so we overlapped a lot.
Yeah.
And
And he was
I think
there. It's the great financial crisis that happened, and you're not there. So yeah, it makes sense.
exactly.
Yeah, I mean,
I mean,
you can see that
it was
coming from like,
inevitable.
yeah, you can see that coming.
Right. And so even though it was a great gig, it was, it had its time. And so I had been a bit spoiled, and if I could do it again, I think I would have been, um, I would have benefited from having somebody with some of my experience, or some similar kind of path
Mhm.
to guide me about where to spend time, who to network with, how to think about what skills I want to keep up or what networks to keep up, so that I could maintain my expertise in a way that I would be able to leverage that into a new position.
Mhm.
And
What do you think those were for you? Looking back, if you had, what do you feel like you wish you had kind of kept up more besides the networking with certain people? Is there certain skills like actual the modeling and that type of stuff, or do you feel like that wasn't really useful at the senior level at this point?
Well, it was always very powerful to have a command of what was happening in terms of research trends in science
Hmm.
and medicine. So, in the areas that I was interested in, um, there was probably some reading, maybe a few scientific conferences I could have gone to. I could have more aggressively spent time with some of the technology transfer people that I'd come to know at
Hmm.
Hopkins, at Cornell, where I had a relationship. Um, and I think I would have stayed more, maybe involved in some way as an advisor to a fund, or at least maintained a little bit more closely relationships on a friendly basis with some of the people who were active investors in the sector, so that I would just be in the know about what the trends were. And there are fads. I mean, right now it's all about rare disease, and um, it, it's it's not necessarily the right move.
Hmm.
I think venture investors are a little lemming-like, and s- I, I I I do also have to confess I was afraid to jump right into venture capital from the work that I had done, in part because I didn't have faith that um, that all of those were great decisions that venture capitalists were out there making. It is dominated by men. There are a few wonderful women that I'd met along the way.
Hmm.
Um, and I felt that in many cases, their involvement was somewhat superficial. And I really liked the sort of digging in deeper with each of the operating companies that I worked with. Um, and I think when I speak to some people now about venture, there is a sense that um, investors make their money on sort of the beginning aspect, not necessarily picking the winners for the long term and developing products that change people's lives. It's about picking the one that you can turn into a tech play and get a great IPO valuation for, and then get out.
Yeah.
And that it's easy to criticize, but there is quite a bit of that.
Why do you think that's happened? Do you think it's just the way that unit economics work and being able, like everything has to go to the software and tech play, or the
Well,
big data
just
or AI? Everything's AI or big data or.
right. Well, I mean, I think AI and big data are very powerful tools, so I'm all for that.
Mhm.
I just think, there's always going to be tremendous pressure on generating returns, and in biotech, the returns take too long, and so the model doesn't really work for investors unless, I mean, for example, the company that we founded out of Hopkins, I got,
Mhm.
it got sold 15 years after we started that. So yes, it was successful, but was that really what the investors wanted? I don't know.
What was their
So,
IRR? I'll tell you. Yeah. Or what
you
was
know,
their, yeah, I mean, it depends. But yeah, no, I hear what you're saying. It's a long incubation period. It can take.
right. And that was exceptional because it was just us and one other investor. So the return was spectacular, but it was,
Right.
we invested $26 million and the company returned, a valuation of over 700 million when it was bought. But it
Yeah.
was like, I mean, that doesn't happen every day. And,
Yeah.
so many of these projects don't evolve as planned. Um, and the venture model, as I said, it doesn't really work well for biotech. It works extremely well for consumer-based products and
Right.
tech, where you can at least visualize revenue sometime in the next within the time frame of returning capital to your investors. So, one colleague of mine that I worked with at the Wellcome Trust went on to a very successful career in investing,
Mhm.
and she was a GA, and then is now starting her own fund, and her investment area is in a field basically where they use technology to accelerate drug discovery and drug development.
Okay.
So there are a lot of ways to use technology in that. And the customers are pharma and biotech companies who have lots of capital and um, want to return faster. So they can use this technology. So that makes much more sense for investors.
Hmm.
Um, so I think it was a combination of, it's a challenging sector, there's lots of pressure to return capital, or at least prove some value sooner rather than later. So people will find ways to do that, even if it's not the end game. Um,
Question: aren't there certain types of funds for like biotech, and I'm just not educated enough in VC, where like the life cycles of the funds or the capital hold periods are just much longer, or no?
um, I'm
Not
not
really.
familiar with any. I think mostly these funds
Okay.
diversified into, the two different sectors for that purpose. But
Okay.
I think it's always remained a challenge. So in the sector, funds morphed toward later stage or more consumer focused or OTC focused products, or there was a trend toward medical devices, then a trend away from medical devices because they're on a shorter regulatory path. Um,
Okay.
so we've been trying different ways around it, but mostly what's happened is the pharmaceutical industry drives most of that, the cost of innovation, but they don't want to take on so much risk. So they don't want to license something in until it's been developed to the point where they're fairly certain it's not going to kill anyone,
Hmm.
um, and that really hopefully it's going to work. Um, but there's really a gap in funding really good early stage ideas out of academia, which is mostly where they come from.
Hmm.
What's happened in the industry now, just sort of a side story, is the venture funds that have been really active and successful in healthcare have started sort of these skunkworks operations where they do very early stage founding of companies. So they have some of their own staff or people that are part of their immediate network. They license right out of academia and try to get programs funded and started internally. So Flagship pioneering. Third Rock has a group that does that. Atlas has been doing this for some time. I think it's not obvious that returns are so easy to get
Hmm.
um, in these projects, and I think they are part of the way toward solving the problem.
And
Um,
the
so
problem being that the just this gap in funding from the early stage academia to something that's from the big pharma not even touching that stuff because it's just too far fetched. Um,
yeah, and that it's a really inefficient model for funding these projects.
hmm.
So this kind of gets to what I'm doing now. But
Yeah. So yeah, tell the listeners what you're doing now and why and where do you
okay.
think the value is? 'Cause I thought it was fascinating when you told me
Oh,
from our
great. I'm
conversation.
glad to hear that.
Yeah.
So we've seen all these venture funds trying this new model out. And Bridget, who's, as I mentioned, my friend since college, a physician and a drug development professional, has also been an advisor at Yale for 3 or 4 years. So as an entrepreneur in residence, she's come across a lot of scientific projects that she thought were pretty cool. She's been on an award panel evaluating projects for a couple of years now. And out of those, she found a handful, 4 or 5, that she thought might be commercializable. And the criteria that she set for herself, which was really when she approached me, was that these be projects that could be commercialized into a product, within a reasonable time frame, and that they could actually get to where they have data to support them within that would be compelling to a pharma company
Mhm.
within a 3 to 5 year time frame for less than $10 million. So those parameters are somewhat strict, but we weren't looking for specific therapeutic areas. Um, when Bridget and I got together and started looking at the 4 or 5 programs, we've picked 2 that we really want to pursue, and we're out raising money for those,
Hmm.
based on the ability for those projects to get funded, um, to attract pharmaceutical company
Hmm.
licensing in the relatively near future. So they need to be in the right category. It needs to be a pretty big category. It
Hmm.
needs to be a drug or product or platform that won't cost too much to develop, because if it's a really expensive product, it's hard to profit.
Hmm.
um, and it needs to have some data behind it that's pretty compelling. And the scientists that Bridget has gotten to know are really very impressive. A lot of them have serious accomplishments behind them. Either they're scholars in their areas of expertise, or Howard Hughes investigators, or other recognition that show that they're really at the cutting edge of their fields. They're highly recognized. They run good research,
Hmm.
and so
You're fundraising to
when
try and raise that 10 million per idea kind of idea, thought
well,
process.
that's what it amounts to. But
Yeah.
what we really thought was venture capital doesn't quite have this right. That each time a company gets started based upon a license from academia, they're looking to hire a team, or maybe a small team, but they want a CEO, a chief medical officer. And some of these people are part time because it's one project with, not too much to do at the initial stages.
Hmm.
So you probably need a medicinal chemist to come help you figure out how to make the compound, and you need to run a series of studies, a lot of which can't be done in parallel. You have to do so many things sequentially,
Yeah.
especially when you're talking about establishing proof of concept, proof that the mechanism makes sense. So you might have different animal models you have to test in, and
Hmm.
then getting it eventually to humans. But in order to do that, you either end up, and this is typical, hiring a team of good people who are all part time. And so they're doing this for 3 or 4 companies at the same time. And this is actually what Bridget has been doing for the last couple of years, until she was hired full time by Cura recently.
Hmm.
So she really had a very up close and personal experience with this, and so did our CFO Ryan. Um, so he had been head of finance at Alexion, and another biotech company based in New Haven, which moved to Boston. And he
Hmm.
said, "You know what? I have little kids. I'm not moving my whole family to Boston for this. I'm going to do some work like this, but for several companies until I figure out the next gig."
Yep.
So the 2 of them had very similar lives, and recognized that you end up with a really half-baked product. You have projects that are all being run part-time by different people.
Hmm.
No one has the expertise they really need, because they're trying to be a jack of all trades,
Yeah.
um, and also trying to conserve capital. And then if that project isn't going exactly as planned and the data don't look good, they're going to do whatever they can to keep that venture money coming, until they find their next gig or figure out a new course correction to make that project work.
Mm.
So, um, and if they fail, then maybe they raised 40 million, but they've got to give 20 of it back, or they don't do the second phase, and they're all out of a job.
Yeah.
So the model that we've come up with is that our operating team has regulatory experience, drug development expertise, and business development expertise, and we know how to run a project. Certainly, CROs are a very big part of this phase of development,
Hmm.
but you really don't need a full management team for projects that are right out of academia, that are still preclinical. So they're not in humans yet. And but you would like to have everybody on the same page. You want them all to be aligned, all to be incentivized, all to be working on the same 3 or 4 projects,
Hmm.
and really focused on maximizing the capital across these projects. So we thought, you know what? We should have a portfolio of projects. We
Hmm.
should have a really high quality team. We shouldn't compromise on the quality of the people. We should just attract the best people, but keep them really busy with a handful of very attractive programs.
Okay.
And so that's the idea. It's really very simple, but and there are a few teams that are trying to
You're
move in that
making sure you
direction
have
now.
enough projects to keep the best people busy in-house all at once.
Exactly.
And so that way
Yeah.
you're able to get some leverage from that pool of experts rather
Right. But
than,
if you're an investor in that rather than the next new thing startup
yeah.
that's being backed by Third Rock, not to use them in a negative way at all, but if you they're great and really smart. But if you're doing that, you kind of got all your eggs in one basket, and the management team also do. So they're not going to make the same decision about the allocation of resources that our team would. Because if we start to see a signal that's not what we want, maybe it's time to shut down that project and allocate the resources towards something more promising.
Hmm.
But um, in the traditional model, you don't have the flexibility to do that.
It's interesting.
And
Yes, you have more at bats basically in your model from the same
right,
group of managers and experts, group of
right.
experts.
And when you
Very
consider
cool.
a 90% failure rate in preclinical, like it just doesn't make sense to do it any other way, which
Yeah.
is why venture funds invest across many projects. But there are some commonalities that, allow for you to leverage one team against a series of projects if you get them all at the right stage.
So it sounds
So
like you,
that's,
throughout your career, you've gone more entrepreneurial now.
yeah.
And tell me a little bit about kind of any advice you'd give before we call it, any advice you'd give kind of to your younger self now looking back at everything that has transpired, or to some of the younger listeners that are thinking of doing something similar, maybe interested in venture, or what they should do.
Um, well, one thing I've always said about venture, which is just more general, is that I think it's very hard to contribute to a venture investment team without having some operating experience, um, because I don't think you can relate as well, and I think you don't have the same gravitas, the same, understanding underneath the hood of what needs to happen. It's not that different from the challenge I think consultants have when they're going out and consulting companies that sell products and they really don't appreciate the sales process. Being selling is the most important aspect of so many businesses.
Mhm.
And yet being a salesman is not viewed as sort of the kind of thing that a Harvard MBA would do. Um, and yet I think it's such a vital part of business. So I think in the same vein, it's really hard to have any credibility inside of an investment organization. PE is completely different in the sense that there's so much more analytical rigor and financial analysis associated with it. So that's a different career path, probably a really good experience for people along the same lines as sort of a banking analyst training
Anything you would have
kind of
done differently
experience.
besides? I remember you said earlier well, you wish you had networked a little bit more. Anything else?
Yeah, well, I think related to that on the venture side, if you're, let's let's say I started a company or was involved in a few, and then became a partner in a venture fund. I I think you would certainly want to have seniority in a venture firm because it's really not fun unless you're helping to call the shots.
Hmm.
You can't really call the shots if you haven't been there. And I think I would have taken a senior operating role like the one that I did at law.com, but I think I would have done one in my sector um, before doing anything else. And I don't want to call it a mistake, but I think I got drawn into the healthcare information space because of the opportunity that I had at the time working with Norman and another friend and former colleague. Um, but it took me out of the loop of what I had spent so much time doing.
Hmm.
Um, so I would have stayed closer to investors, I think, and to the trends in terms of uh, where the markets are, what was getting funded, what technologies were hot and potentially going to contribute to the growth of the sector, like AI, um, and maybe gotten closer to one of those startups or funds who are investing in those. So I'm not providing, a clear path, but I think you want to have expertise at a deep level. And when you go to work for one company, you're drawn into the trenches, and your ability to kind of see what's happening around in the world, is compromised. It's just you have to decide consciously: is that the trade-off you want to make? And are you developing a skill set that you can then transfer to your next opportunity? So if you're running the company and you're doing the fundraising and you're successful at it, and you're going to grow the company, that's one thing. The startup that I went to work for didn't have a great business model. It became a platform for the two founders to do consulting. And so I left, but I ended up doing something else in the healthcare IT space, which was fascinating, but also was really outside the biotech space. And I probably would have been better served to have stayed, closer to that, because that was where
Yeah.
my
Yeah.
expertise was.
For sure. Makes sense. Yeah, I think it's always tough when you find an exciting or interesting opportunity that may be outside of what you've done traditionally. You can chase
Yeah.
that and then get sucked into the trenches, like you said, where you don't really aren't developing the skill sets or whatnot. You're just kind of just day to day doing the work.
Mhm.
And you look up 5 years later and you say, wait a
Yeah.
second, it's time to do something new. And yeah, for sure. I feel like I fall into a little bit of that pattern as well here with WSO. I looked up and it's 10 years full time on this thing. Like what's going on?
Wow.
Yeah, but it's fun. I am learning every day, so that's good.
I,
um,
I I think that's the best thing. You can, if you can say that, you're probably doing the right thing. But it's kind of comforting for me to hear that, because I think, you're also able to have the flexibility to spend time with your family, and that's important too. I think no one can predict for you whether your kids are going to kind of need you in a certain way, whether it's being there for them physically or being there for them emotionally, or
mhm,
you know helping them dodge a bad situation with a kid around the block. Eh, you can't really quantify that, but there is a lot of value to that, and I think the fact that you've spearheaded this and you've been driving it is really great, and that in and of itself is
it's
an
fun.
unparalleled experience, right?
Yeah, that's fun. Yeah, I can't complain. I'm very lucky. So, well, Julie, I really appreciate you taking the time out of your day to share your path and your wisdom, and I think people will enjoy hearing about it. So, thank you.
Oh, thank you. It's really fun.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. And until next time.